Whenever we see superstars at the pinnacle of their career, we tend to give ourselves pressure to achieve the same in a very short period of time. No one starts a great trader, but we all rise from dust, and if we are fortunate enough, we reach our destiny before giving up. Trading was hard in my first days, but these things helped me achieve consistency, where I can safely be comfortable making consistent returns from the market each quarter as we go throughout the year. Sit back as I walk you through the changes I made for me to be consistent. The first thing was actually batch trading. Well, this may be new to a lot, but I actually adopted it from other successful traders. Batch trading is a way of trading with one system for a certain number of trades before compounding. In my case, I started bunching 30 trades per batch. Within this batch, I would trade one setup, 2-to-1 reward risk ratio, with a predefined accuracy of 50%. I would like to challenge each and every one of you watching this video. Have you ever done this batch trading, whereby you trade a certain number of trades? You may choose the size of your batch by yourself. You can even say, I want to take 50 trades or 100 trades with the same system and see if you fail. After the batch of 30 trades and expecting 50% win rate, I would get a profit of 15R, and some people would be confused what this means. It means it's actually 15 multiplied by the risk per trade that I was taking. For instance, I usually risk 1 to 3% depending on the account that I'm trading. On a funded account, I trade with 1% risk. It means it's 15 multiplied by 1%. This allowed me to move through phases of losing streaks and winning streaks with my focus on finishing the number of batch or the number of trials. The second thing that I changed was treating trading like a business. A lot of people have a mentality of trading like a hobby, something that they use to take off their mental stress. I was once in the same shoes, where I would deposit a small amount of money and expect to gamble it and make big, till I realized this. Businesses have what we call return period, which is a period expected to return the investment you injected. If you check on Google, if you check on Microsoft, they had this return period. The bigger the business, the bigger the return period. I discovered that Forex trading is a very gigantic big business, and the returns takes a long time to be seen. Therefore, I started thinking of 60 to 90 trades, that is 2 to 3 batches of 30 trades to see my return. With this, I started to see positive changes on my equity growth. The other thing was mindset cultivation, one of the most important parts of trading. While I was in my early days of my trading journey, I never knew that there was a different capital you need on top of your trading account capital. Of course, you have deposited that $1,000, but you also need another type of capital. This is called trading mindset capital. You really need this on top of your trading account capital. The minute I gave maximum attention to this, a lot changed. Always preserve your mindset capital. I started to constantly deposit to my mindset capital through reading mindset books and watching trading-oriented documentaries. Studying trading mindset is sweet, and you can only understand this test if you do it yourself. So, make sure you do this to see positive changes in your equity growth. Managing risk exposure. The easiest way to break your trading career is to try to quickly make profits or return what the market is taken away from you. I had this mentality of fighting the market. If I make a loss, I wanted to quickly make it back. If I fail to get a trade today, tomorrow I want to make and compensate what I didn't make today, the previous day. Therefore, I would over-risk. The painful cycles of blowing accounts is necessary in one's trading journey, and some would ask why. Because the fear to go back where I came from was a good reminder that each trade I take must not expose more than 1 to 3% of my account. Some would actually say, how does the pain actually help you or remind you that you need to expose your account to this consistent amount of loss? It's all because some of us only had plan A, no plan B. So if you want to really make changes in your trading, take it as the only plan available. I used to blow my account with one trade, but the high BP, some call it hypertension, and the palpitations that came with over-risking taught me the game of risk management. I calculate the appropriate lot size for each trade, so that if it goes against me, I lose a predefined loss depending on the account that I'm trading. On my real account, I risk not more than 3%. On my funded account, I risk 1% maximum. The last but not least was actually to choose consistency at all costs. I chose consistency over every other reason or justification for every trade. I started to recite this mantra every day before trading starts. Here's the mantra. I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I will never violate any one of them. In summary, you will need to make money. You will never make money, with the same method that made you losses. Be the change you want to see. Thank you, and I'll see you on the free Telegram channel. I'll leave the link in the description box below. Have a blessed day.